year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Nashville. It's Thursday, February 4th. I'm Charles Brown, Portfolio Manager with CB3 Financial. We are so glad you are with us tonight and really enjoying all the dialogue here in the green room from you guys. This is what we want. We're a community here, and it isn't just about me just talking to you guys. You guys dialogue with each other, and you'll probably have better things to say than I do tonight. So from COVID to the U.S. political scene to the world economic scene, to clarity. This is CB3 Live. If you're new to the show, be sure that you click on YouTube and subscribe to us. Tonight, we've got an earnings season blitz report and the pandemic recovery. A lot going on in the COVID story. We will get to that. Again, if you're not following us on Twitter, be sure to follow my tweets. I continue to be amazed at the LinkedIn audience I have. It's like 3 times the size of Facebook and Twitter. But, however you're seeing my daily commentaries, they're out there. Dialogue with me. I have clients that are doing it practically every day and some that aren't even clients. So just glad to be part of the community. Glad you guys are here tonight. See if we can get some dialogue going between you guys that I'm not even part of. And that's all good. It is all good. CoronAmerica, guys, look at what's going on here. This is some really positive news tonight. For the first time, we have more vaccination doses given than we have total confirmed cases, almost 34 million versus 26.5 million. Finally, seeing some light at the end of the tunnel. Obviously, 104 million cases worldwide, 2.2 million deaths. We're staying around that 2.2 percentage. Any life lost, obviously, I need to be careful to always say that. But 2.5% is far, far less than the last pandemic. So this is the hard data. I've been telling you guys since March. Hard to believe we're almost at a year on this. But the hard data is saying we are getting past this. And I'm going to give you more in this section. Yes, the deaths did rise this week, but at least are trending downward from mid-January. About 3 shows ago, we hit a high. And hospitalizations continue to ease. That's a good thing because it reduces the strain on our hospitals across the U.S. Now, one of the things that I follow, of course, there's a personal and emotional toll to this pandemic, but there is definitely an economic toll. And it's interesting to me, look at the scale here. Those states that are up in the 8.5%, 9% unemployment range, sorry to be political, guys, but the reality is those are blue states. Those are states where shutdowns are prevalent. Hawaii, California, New York, Connecticut. What's on the left-hand side? All by itself, there's South Dakota. Okay, Christie, last name Moen, I think his last name, very, very successful governor out there, doing well. Nebraska, Iowa, Utah, North Dakota, successful state, guys, and that's what's happening here. We have a big divergence between the shutdown mindset of the blue state governors and the let's try to keep it open and protect people the best that we can from the red state governors. That's what it is at this time. So what has happened to small businesses? Roughly 56% of businesses report either a 50%, more than 50% loss of business or 26 to 50. I kind of feel uneasy saying this, but we actually had a slight increase. So we're in the 8th percentile, and that's because people were saving more. We'll get to that data in the next section. And a lot of them are just taking the money and putting it in the market because they're seeing the market basically is looking past the data, looking past the pandemic data to the economic data, which I've been giving you guys now for almost a year, and it continues to be positive, and you're going to see it tonight. For instance, private sector employment increases. These are in thousands of employees, healthcare, professional business, just great across the board from the period December to January. Only thing negative was information services. Look at where it was from November to December. Leisure and hospitality just getting whacked, and pretty modest increases in the other areas. But as the months move forward, I think we're going to see more bars on the right side, and that's what we want to see as the economy continues to get back to where it has wanted to be since 2019, actually late 2019, early 2020. So what's the number one household expenditure? Well, it's savings. And I've been talking about this. Here's the hard data from the Commerce Department, approaching $20 trillion. And that's because people are staying at home. There's some fear in there. They're not driving. They're not flying. They're not going on vacations, although that's loosening up. But people are saving more. And what are they doing with that? They're investing it. Because of the vaccines that I'll be talking about tonight, and I've talked over the last few weeks, this update from the International Monetary Fund is showing the U.S. Look at the October forecast versus the January forecast. The light blue bar, the dark blue bar is the January update. Most of the world is expecting a slight increase, but the U.S. a huge increase. In other words, getting back to normal. That's what we're wanting to see, and as quickly as possible. One of the great stories, if you watch my Monday show, those of you that are in CG, and if you're one of my clients, every client of mine has a CG account. They may not have all 4 programs, but they definitely have a CG. Novavax was one of the flyers that I took. I say flyer, and I laugh with that because they were not Moderna, they were not Pfizer, they were not AstraZeneca, but I thought they had a real good chance to be successful. And you see those huge green bars. That's what has happened since I've seen you last. It actually happened Friday and Monday, which I was able to mention in my Monday update. I'll elaborate even more now. They're just looking really powerful because it's possible that they have the superior vaccine. It's almost like, as they say in software terms, version 1.2, whereas AstraZeneca and Moderna, Pfizer were 1.0. So that's good for us as investors, and it's definitely good for the recipients, okay? So the stress testing that the Federal Reserve puts the banks through, they want to know, because of the crash of 2008, 2009, they put these stress tests on banks to see if they're ready for the next crash, if it is going to happen ever. Well, of course, at some point it will. So this same stress testing, I'm giving you that as an example of what these vaccines are doing to CVS, Walgreens, Kroger, and other big either department stores, grocery stores, pharmacies, to see if they're going to be able to handle the stress. We've got the vaccines now. Now the issue is deployment, and can we be successful with that? In another positive development, AstraZeneca is going to increase their shipments to Europe. This literally just came out yesterday. That's great news. Obviously, they're covering. They're not a U.S. company, so their European market is their number one target market. But that's great. 30% jump in the first quarter. That gives them till March 31st. That's great news. So this is an interesting story, or aspect of the story, I should say. AstraZeneca, Pfizer may be combining their two. So imagine a dose 1 from AstraZeneca and a dose 2 from Pfizer. Not only would that relieve some of the pressures on the supply chain, but also efficacy may be increased by using one vaccine for the beginning dose and a second vaccine, a different manufacturer, for the second dose. I think that's a great story. It's just developing, but definitely these big companies are starting to make some serious progress here. So given this scarcity, this trial that's going to be launched in the UK is something that we're going to be following about this first and second doses. And we're starting to see promises now that you saw the increase with AstraZeneca in Europe for 30%. We're seeing now that the states are expected to get an additional 10.5 million doses over the course of the first quarter. And again, this is a developing story, but excited about that. So the biggest advantage of the AstraZeneca and Oxford shot are price and storage. $4 a dose versus $20. Okay, so that's a huge difference. Although if you're getting a vaccine, you're probably not looking at the price tag. You're just wanting to be healthy. and the ultra low temperatures. You probably remember from, I think, 2 episodes ago, I was talking about, they've shipped these doses, but they haven't been administered because they weren't stored in a cold enough environment, and they had to literally dispose of some of them. Can you imagine having to waste a vaccine? So this new blend, if you will, as they call it, is something that doesn't require quite as much extensive cold storage. So that's a positive. Lots of little tidbits here. Actually, more than tidbits. These are major items to me. So drug makers racing to catch up with this dangerous variant. I talked about this last week. So a variant is a variation of the original COVID-19. And what they're finding is, and even though this is written as a double negative, I realized that after I did it, there's no evidence that existing vaccines won't work. There is evidence that they will work against the first new strains. There was a variant strain discovered in the UK and also one in Africa. And it looks like that these vaccines are going to work against both of them. And that's a great story. I mean, if you have to start over again with a new vaccine, not a good situation. So to me, guys, this is really, really encouraging. So when is the U.S. economy expected to reach its pre-pandemic peak? Well, this is the first chart that I've seen that I'm really kind of excited about. I see it coming back here in 21, tapering off a little bit, and then, by 25, still staying above that potential GDP line. Now, they're predicting a recession there. I'm going to forget about that because I don't believe that for a minute. But the point is that this V-shape, how many times have I been using the phrase V-shaped recovery, right? Still looks strong. It still looks strong. And guys, that's just positive. It's just really positive. So this week's news on COVID-19, I hope that encourages you. I don't know what you're seeing with what you're watching, who you're watching, but I'm giving it to you straight. These are from multiple sources, and I hope that encourages you. What's this week's question? Is your area, I didn't put area, but is your COVID-19 vaccine available now? Answer A, yes, I've been vaccinated. B, well, yes, and I plan to get vaccinated as soon as it's available for my age group, okay? C, maybe, but it's not in my area yet. Maybe it's in Nashville, but it's not in, Williamson County. It's only in Davidson County, or fill in your state and city there. Or no, I think this natural recovery. Now, I talked about this last week, that Pfizer had actually stopped some of their vaccine distribution because, at least on certain demographics, their study showed that a natural recovery, in other words, letting the antibodies inside a healthy person, not someone that has comorbidities or 2 possible lethal diseases. But that's a choice that some people are making. So what am I going to see here? I've talked so long, you guys are giving me answers now. All right. Looking through here. What do I see? Okay. Hey, Debbie Demogowski, how are you? Dr. J, good to see you. I got my pop filter in place. Variants are concerning. I hear you, Thomas, but I'm pretty encouraged by this news. Doc, you're getting your vaccination on Saturday, and I'm guessing that's going to be at Kroger. I don't know. Gene, and you, good. That's great, Kay. Good for you. Oh, Kroger, yeah, I just saw it. Okay. All right. So, hey, Greg, and you've been vaccinated. Okay, that's outstanding. Tom, scheduled this month as a first responder. Yeah, got it. Tommy, okay, as soon as it's available for your group, and you're a young guy, so you're going to have to wait a little bit. And I hear you, Martha. I'm kind of in that D camp right now. I could change, but Don, D, bunch of D's here. Okay. Guys, thanks for those responses. And Larry, because we can't get any answer from any other place. Okay. All right. Thanks for that, guys. The U.S. economy, man alive, are we off to a start this year? As Charles pointed out in the pre-roll here, we just had a record day. Well, we didn't just have a record day. We've had 4 record closes. Russell, NASDAQ, S&P, everybody's in the green, but the Russell is just way out in front here at 11.5, NASDAQ at 6.9. S&P at 3.1, Dow at 1.5. I mean, you can't just say, well, just put the money in the market and anywhere you put it's going to be fine. Guys, that's just not true. And you saw this last year as I bring this section to you every week. You got to be in the right places, and that's why I'm here, okay? It's not just throwing a dart, okay? The Russell's doing that well for a reason. We've talked about that. We'll get into that in just a little bit more here. So where are our programs? You guys know Those of you that are new on here, if you don't know this, these are my actual account statements from Interactive Brokers. That's in the footer there. It says Interactive Brokers. And this is our CG program, up 9% on the year. So doing well, really enjoying that. Got a nice spike here the last couple days. Our top performers, I don't mention this, but you guys can see this. So Invax, no surprise there. I've been mentioning them. AMRC, Tesla, no surprise. NEO, no surprise. And Google blew it away, jumped 7%. And when you have a company that big jumping 7%, that's really something. So, but as good as CG is doing, SG 12.5 on the year. We're basically, 5 weeks into the year here. 12.5 is a pretty good return for an entire year. Top winners are some of the same, but Bed Bath & Beyond, Roku, look at there. Tesla's the 5th biggest performer. It's the 3rd biggest in CG, but these other high earnings projection stocks are what's given that 12.5% return. And then DG, which is our 3rd growth program, much more conservative, much less volatile, trades ETFs. So XLY is discretionary, small cap. QQQ is the NASDAQ, communications, and then the technology sector, actually 5th. Because big tech, even though it is very strong, has underperformed the small cap stocks. That's the story so far this year, different from how 2020 played out. Okay, so these are all the sectors. There are 11 of them, and you've heard me say diversification might as well be pronounced worsification. We invest in the 3 to 4 or 5 at the most winning sectors. We're not even really in materials other than DG has a position in silver. We're in infotech, consumer discretionary, and communication services. And you can see they're all easily beating the S&P 500. And that's why we restrict our investments to the winning sectors. About every 5 or 6 shows, I show this chart. I want to thank Tom Bowley, who creates this data. Earnings Beats, who is just an awesome research firm. So grateful to have them in my arsenal of research tools. But guys, this goes back to 100 years. So for the 20s, obviously we had a massive bear market during the Great Depression, and then pulled out of that for 20 plus years, had another secular bear market. Remember, secular is different than cyclical. Okay, so that's a major bear market from the 70s, and then had this huge move from 80 up to 2000. All right, and then another secular bear market. So I am expecting, we pulled out of this secular bear market on April 10th, 2013. When we broke out of this congestion up at the top. I wish my pointer worked on the screen, but you guys get the idea. And we are now headed, my projection goes to 2031 to 2032, and that is not a typo or a misspeak. That is what I'm expecting for this secular bull market. And I will show you the data in just a few moments that supports this. So this time of year, we have earnings reports coming out. A lot of you guys will say, what do you do with your time? You pick a few stocks, and it can't be that much research. Well, so this just shows you, one of the companies I use, a Market Insider, which lists, these are just the earnings report for a day. This is just yesterday, okay? Or I should say, today. But then tomorrow is coming out on the 5th, obviously, and that'll be a whole new string of stocks. So I need to really follow, and I don't look at stocks that are in losing sectors. So just to pick something on here, Philip Morris is a consumer staple. Probably not going to look at that because they're not going to outperform Tesla. They're not going to outperform Novavax. They're just not, because they're in the wrong sector. I don't care how good the company is. And it's those kinds of decisions that we have to make for you on your behalf. Okay, so Alphabet, which is Google, surged that 7% I just told you about. That just killed EPS. Now, Amazon did too, and yet they fell. Well, why did they fall? Why did they fall? Because there's a second story with Amazon, which I'm sure you guys know by now. Jeff Bezos will step down as CEO and transition into the executive chair, whatever that means. If you believe that Jeff Bezos, who started this from nothing and raised it to one of the biggest companies in the world, is going to step aside and let someone else manage it, I have a bridge in Manhattan that I would love to sell to you. So the story here, $125 billion for fourth quarter revenue, just astounding. 44% year over year holiday and pandemic driven demand sales. It's just a great, great story. He's supposedly going to be replaced by Andy Jassy. So many of you don't know this, but Amazon is not just a provider of, let's say, everything that's in your home or that gets, shipped around the neighborhood. I see an Amazon truck, it seems like every hour in my neighborhood. I don't know about you guys. You guys are still shoveling out, at least you Chicagoans. I'm sorry, that was not nice. But anyway, Amazon also hosts web services. I mean, a lot of web services. Big companies like Dropbox doesn't have their own servers. They actually host on Amazon. And there are quadrillion terabytes of data of Dropbox and many others. So Amazon, it's just a great success story. I've told you guys many times, I'm always looking for the next Steve Jobs. Certainly, Elon Musk is one of them. Certainly, Jeff Bezos and what he's done with Amazon is one of those stories. And just to be on my soapbox for just a moment, guys, this only happens in America. Okay, this country, this economy provides these kind of opportunities to have these success stories that benefit millions, tens of millions, arguably across the world, hundreds of millions of people. And I just love seeing these stories. And these are great stories if the economy were doing great. We just exited a recession. We're still in a pandemic. We just had the most acrimonious political election of our lifetimes, maybe in the history of this country, and yet the market continues. That's why I know that we're going to be fine. I got to quit hitting my mic here, guys. Sorry about that. Economic indicators. I put this slide in here to kind of differentiate. So these are basically the supporting data that I think support my assertion that we're in a secular, not cyclical, secular bull market, because they just keep coming in. The ADP private payrolls number. Now, you guys know once every 4 weeks, we have the Friday employment data. It's on the first Friday of the month with a couple exceptions, but this month it is tomorrow. But the Wednesday prior to that, as in yesterday, ADP, which is automated data processing, issues their private payroll data. They should know because they issue paychecks to about half of America. The survey was for a 70% or 70 number, and the actual was 174. So I'm expecting a really strong number tomorrow. This is just super strong, just coming out of this pandemic, guys, as we're getting there. Same thing with ISM, Institute of Supply Management Services. So this is the service component. Okay, again, you can see it's getting back to 2018 levels. Let's look at the manufacturing component, already taking out, the numbers back to 2010. It's just kind of astounding. It really is. The manufacturing portion of America has recovered more quickly than the service industry. And you can see that when I compare the two data that I just gave you on one chart. So the gray bars there are recessions. Look what happened back in 2008 and 9. And now look what's going on here. Guys, there is a night and day difference between how this economy performed 2008 and 9 versus 2020, 2021. And manufacturing has pulled out really a pretty strong lead. The difference here between previous recessions is that so much of the service industry, which includes hospitality, airlines, etc., just has been crushed, and they've just got a ways to go to catch up. They really do. But this strong manufacturing index, what has it done to consumer confidence? That's the green line. It's basically people, and I'm a consumer too, and I'm pretty confident. I'm very confident, as a matter of fact, that not only is the market going to do well, but the economy is going to do well. Now, I don't think that's contingent on a presidential election, and I don't think it's contingent on who controls the House or the Senate. I have my preferences, as I'm sure you do too. But the engine that drives America is business. The business of America is business, as many presidents have said over the years. Most of the time, we want to see charts reaching upward. This is one that's kind of encouraging because it's reaching downward. Customer inventories basically can't keep stuff in stock. That's a colloquial way to say it, but when you see inventories dropping off like this, that means consumer demand is strong. Remember, of the GDP components, which is government spending, business spending, and consumer spending is 2/3 of that, 66, 67%, And they have high demand, which is why we can't keep inventories for the items that they want. More strong data, total construction spending higher than was expected. Key takeaway is that residential, and we're going to contrast this with corporate spending, just continued at a solid clip, because of the demand for new homes. I can tell you, everywhere I look down here in greater Nashville, there's a crane somewhere building something, okay? It's just, and you're probably seeing it in your home area too. Those of you that are in Florida, I know you are, okay? Factory orders also up. Key takeaway showed another increase in business spending. Remember, business spending is not the greatest component. That's consumer spending, but it's still an important one. It's second. Government spending is third. Probably find that hard to believe, but that is what the data says. Okay. So consumer spending, durable goods, non-durable goods. So durable, obviously, are refrigerators and microwaves, things that are going to stay around for a while. Non-durable, clothes, etc. Both of these, pulling back just a little bit, but, the V-shaped recovery is there. This is what we've been talking about for months now. The V-shaped recovery in multiple aspects of the U.S. economy. Not only the V-shaped recovery in the data, but in essentially the mindset or the consumer optimism, which I just showed you 2 slides ago. All of that is because Americans are believing this is going to pull out and get back to normal. This huge V shape, speaking of which, right here in the Great Lockdown, that's a new phrase. Instead of calling it the Great Recession of 2008, the Great Lockdown and Recovery. Tapering down a little bit, and that's because of the second wave of COVID. Just like in 1918, this second wave, I think, has in many ways been worse because we're all fatigued, at least in the beginning. It was something new, and we kept thinking maybe it would be over. But now that we're at a year on this, we know that this is going to be with us for a little bit longer. It will eventually go away. We know that. Business equipment spending, this is just corroborating the previous data that I'm showing you. It's definitely leading toward a positive GDP. We got the first reading on GDP, which I mentioned last week, and that's 4.0. The projection was 4.2 for the fourth quarter. Remember, we're always looking back. But the first reading for January was 4.0. The February reading will be in, I think, 2 weeks. Okay, and I'm expecting that to probably be 4.0, 4.1. But that's a good number. We like that 4. This was interesting to me. Okay, so during the early part of the pandemic, look at the contribution to GDP here from exports and imports. Well, imports obviously we're buying all kinds of things because manufacturing was shut down. And that's why you see green below, which was actually hurting GDP. But look at the flip the last 2 quarters. And that's because we got reopened. Now, even Andrew Cuomo is saying, even Gavin Newsom, okay, guys, that's New York and California. I'm sure you know that by now, right? Hey, we got to get back open. Okay, well, welcome to the canteen, guys. We've been saying that. This is the data you're seeing in front of you. Because the economy has gotten reopened, exports are now positive contributors, even though it tapered off a little bit last quarter. And again, I think that's just the intensity of the second wave here, but that's positive data. Existing home sales, okay, highest since 2006. No surprise here. Anybody that's in real estate sales, I know the lady that sold us our home here in Nashville said, if a place comes on the market within 6 hours, we have 25 showing requests. All right. And because of that, it's just really hard to stay in business because there's not enough inventory. It is a massive seller's market here. I'm hearing from people that are traveling in South Florida and people that live in South Florida, but the very same thing is happening there. Just cannot get enough properties available for the demand. If you look at it in the short term, like a 15-year term, look at this red bar, these new home sales. Okay, so existing home, new home, looking at both sides of the data. If we go back a little bit, you'll see that it's not where it was in 2006. It's at the highest level since 2006, which of course is what I just mentioned earlier. But this is strong. This is a really strong read on data, guys. If this keeps going, it's just great for the housing market and for Americans in general, because it means they've got the money to spend on either new homes or improved homes. Okay. as you can imagine, that home builder sentiment, and that's what this is, as at lifetime highs. We're going back to 1995. We didn't even track it earlier than that. So home builders, they're feeling really good about things. That's where a lot of jobs are in this country right now, obviously. Okay. Now, I mentioned earlier, there is a significant divergence between private residential construction and private non-residential. That would be corporate buildings. I've been saying that I believe strongly that this move to, and I've shown videos on this, okay, to support my premise. This work from home mindset is permanent. It is permanent. It is not going back. And you can see this non-residential building, guys, nobody's going out and building office parks in the suburbs of Chicago and New Jersey and even Atlanta or Phoenix, because they're all waiting to see just how long it's going to take for America to get back to wanting to go into work. Guys, it's not going to happen. And all you have to do is watch the big megatech companies that are saying, we're doing just fine. This is working. So our demand for, let's say 4 million square feet of office space every year as our company, increases, whether that's Microsoft or Apple or Google, we're just not going to do that anymore. So this is a trend that I believe continues. We are positioned well. This is one of the things we do as your portfolio manager, is figure out where these trends are. This is a larger graph. I'm trying to do this where I'm showing you short term and then long term. Let's go back to 2013. Black is the non-residential, purple is residential. So what I showed you in the previous slide was just a microcosm within the pandemic or the recession. But when you look at a lot more history on here, we're just lifetime highs on a divergence between residential and non-residential housing. Why is all this important? Because if I'm going to invest for you in areas that are growing, I need to know where people are spending their money. The reason this data looks like this is because people are ponying up at the bank, taking out mortgages or paying cash for homes. There's plenty of that going on too because of people's rise in stock portfolios. But that's where the money's flowing, and we need to be there participating in that rather than just sitting around and hoping that our stock's going to go up, okay? New orders for durable goods. This is a great data too. Key takeaway is that the manufacturing activity held up reasonably well, even with the surge in coronavirus cases. I've been saying this about the second wave. There will not be a third wave. I firmly believe that. This tapering, I think mid-January is going to be the peak of this entire pandemic. I could be proven wrong, but that's what I'm saying right now, especially based on the strength of the vaccine data that I just gave you up front. If I sound wound up, it's because I'm really encouraged by that data that I'm seeing, by Novavax having an additional vaccine to bring to the market, and the combination that they're trying of two different vaccine producers that could be good not only against the variants of COVID-19, but it also allows for supply chain coverage. If one manufacturer just gets overwhelmed, that you could use another manufacturer as a proxy. Okay. Auto industry, obviously the number 2 area for consumer discretionary spending after houses is automobiles. This data has been strong. It just keeps getting stronger, guys. We're looking back to 2016. It took out those highs. And I think we're just going to keep going in this direction. Really, really positive. And I always finish the section with this chart on S&P earnings. We have, if you look at the yellow highlight, we've crossed 50% of the fourth quarter earnings being previewed. And we are at 83%. Look at the green, 83% beating expectations. The historical norm, as long as I've been doing this, is about 73 to 74%. Guys, a 10% beat on that is staggering. Now, we have almost half of the S&P to go. So you got to come back next week and the next week until about the second week of March when the earnings taper off. There really aren't any after about mid-March. And same thing in June and September. So, but the point is we're just on track for surprises in earnings. And that's why the market continues so strong, guys. I mean, people are looking around and going, how can this be? Blah, 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 blah. And it doesn't matter what you put in that sentence because the data is there and the data is strong. And if the data is strong, that means the bull market will continue because the rest of the news is pretty grim. I mean, millions and millions of people have died. The acrimony. Just today, some woman that was just elected to the House of Representatives just was taken off 2 committees. I mean, the acrimony in Washington, I find just abhorrent. I really do. Sorry for the editorial on that, but that's where I think it is. So I continue to get questions about Robinhood, AMC, crypto, and I'm not going to hit you with more crypto this week, although it has been an interesting week in crypto, and I've talked to a bunch of people about it. But I just kind of wanted to button this up because there are really 2 different contingencies on this. There's the big trader and the little trader. You got the guy down here with his arm up in the air. Hey, hold the line, boys. We're taking on the big hedge funds. So I thought it would be useful to, just sort of interview, if I could, someone that worked at a big brokerage firm and then an individual trader, because there are 2 different mindsets that come to this. And I think it'll be interesting for you guys to see. Listen to what a big trading firm guy has to say, and then an individual guy has to say. This is the future of the markets, guys. There's a little bit of Johnny Depp in here and the Pirates of the Caribbean mixed with Raiders of the Lost Ark. This is the financial frontier of trading, and it's taken on a new flavor, and I find it pretty compelling.
Hi, I'm Steve Sosnick. I'm the Chief Strategist at Interactive Brokers.
My name is John Hagedorn. I work in the self-storage industry.
I've been with the firm for over 25 years. I've been in the markets for several more before that.
I got involved in investing because I wanted to make my money work for me and provide a better life for my family.
I try to get as many points of view as I can. I subscribe to the Wall Street Journal. That's not just for your plug. That's because it's been a necessary part of my day for quite a while.
I really don't pay that much attention to the stock market, if I'm being perfectly honest with you. I'm more of a set it and forget it type of investor. Most of my positions are long, and when I am interested in the more minutia and the day-to-day goings on in the stock market, I typically will turn to Wall Street Bets because it's where the flavor of the day type of stuff is going on. And so I saw a post from DFV early in January where he basically showed that GameStop was massively shorted, and at that point the stock had started rising pretty steadily. And that was really what led a lot of people and myself to take a closer look and to jump in. The best way to describe Wall Street Bets, it is a degenerate hive for gambling on the stock market. And that's not an insult. Many people that frequent Wall Street Bets will willingly tell you that and wear it as a badge of honor.
I describe the Reddit forum Wall Street Bets as the latest in hundreds of years of human beings trying to get together and discuss their investments. They did it in coffee shops in Amsterdam and London. They did it under a buttonwood tree in colonial New York, and they're doing it now on Wall Street Bets. No, I think what's discussed on Wall Street Bets should be more chatter among friends rather than actual advice. I think that in any time you're getting investment advice, you should figure out what is motivating the person who is giving that advice.
It's tough to know because Wall Street Bets is just pure, unadulterated gambling chaos. You don't know what somebody's angle is on there. You don't know if somebody's trying to pump a stock or dump a stock. You don't know what their goal is. But with that being said, sometimes some interesting financial advice gets posted there. And if you are interested, do your own research, go take a look. This is publicly available information. And if you like what you see, take a position.
There's never really been quite so much focus on let's stick it to the man or let's bring these guys down. I think what we saw in Wall Street Bets over the past few weeks is really not all that different than a guy in a Viking hat running through the halls of the Capitol. It's in many ways a similar type of stick it to the man type of sentiment.
There's no wizard behind the curtain directing everybody what to do. It is pure, unadulterated, raw mob mentality. Okay, you go in there and you can see at any given moment on Wall Street Bets, there's a million different people talking about a million different things.
I don't know that this is outright manipulative. And you do have to wonder how many people were using Wall Street Bets to entice others to help out their investments rather than trying to help others make money through their investments.
There's nothing market manipulating about a totally anonymous, democratic internet forum where people can go and post what they think is good and what they think is bad and what you should and shouldn't do.
I'm not allowed to comment for that on the record, but let me explain something that goes on that is not well understood. That is a feature of markets, not a bug. It was perceived as the clearinghouses or the brokerage firms turning over the monopoly board just as the little guy was winning in favor of the big guy. I think it's a lot more complicated than that.
I would need to know more about exactly what happened at Robinhood. Why did the CEO of Robinhood go all over the place, all over media, and do a ton of TV interviews and claim that this wasn't a issue of lack of funds on their part and that they were doing it to protect retail buyers and doing it to protect their customers?
There was no liquidity problem. And to be clear, this was done preemptively. So we're really in unprecedented times. And in order to protect the firm and protect our customers, we had to limit buying in these stocks.
The best thing we could do is all be educated better. Everybody. I could be educated better. I learned about the little weirdness in short selling just last week. Everybody, the more education that's out there, the better. Never stop learning.
First and foremost, there needs to be just a hard look at exactly what mechanisms and tools hedge funds use when they're shorting companies. Things like that have to be cleared up. Retail investors and investors in general have to feel that it's a level playing field. And right now, it certainly doesn't feel that way.
I tell you what I like most about this video is that the amount of dialogue that's going on between these two guys, and then within the Wall Street Beats community. As he said, I need to get educated. Even this guy that's worked for Interactive Brokers, which is our clearing firm, by the way, for 25 plus years. And I thought that when I saw the video the first time, I thought, I need to be sure you guys know this. I don't have a monopoly on all the ideas and all the knowledge and all the research. This really is a community, and it's the same kind of community that Robinhood and Wall Street Beats and Reddit have developed. This can be our community. I mean, we're the fledgling 25 to 35, 40 people that are on here live, and then another 100 or so, 150, whatever, every week watch it. But when you're on live, you get a chance to express yourself, express your opinions, ask each other questions. And I saw that in the chat earlier, and I'm even seeing it, now. So let's do this, guys. Let's dialogue with each other. So I'm going to, run through these questions and answers here, and then I'm going to look in the chat box, see what we have. So I get nervous about the market when it's A, big down day, B, many big down days, C, when the markets are quiet, as in I'm concerned something's going to happen, or D, I'm always nervous. Okay. All right. So Tom in LG, Lake Geneva, is B. All right, I'm going to go back up here and pick up some of these questions that I didn't get to, okay? I hear you, Charles, on not getting the vaccine. Yeah, there's quite a few people in that category. And you know what? I am right now. I think I expressed my opinion on that earlier. I won't go into more right now. Okay, so you're right, Jimmy. It is definitely crazy demand for real estate, and it's in multiple places in the country. It's not just here. Mostly south, mostly warmer states, okay? And did I mean a mid-July 21 correction, not January 22? I didn't mean to imply any correction. I can never guesstimate when there's a correction. I can tell you exactly when there will be a correction. There will be a correction when the number of sellers exceeds the number of buyers. And in fact, the high price of the market is when the last buyer has bought and there's no one left but sellers. Now, when that moment will happen, I don't know. I can just tell you what causes it, okay? All right, what else? Let's see here. Understand. We've got more answers. B. Lots of B's here. When there are many down moves. Yeah, that's good. After this patcher, I say whatever and don't worry. Thank you, Martha. I appreciate that. I hope that some of this is because I'm at the helm and I try to keep you guys encouraged that we have seen all this. Remember last week's show when I asked you to lean in on the monitor and you saw the little bitty red bar that was, the 3-day correction we had. And that was, in the grand scheme of things, it was just a tiny blip. Okay. Kay, agreeing with Martha. That's good. So, very good. Very good. Mark and Debbie, good. Appreciate you commenting on that. Never nervous, Inova? Probably because you're young, right? Okay, that's good. All right. And Charles, yeah, I know the naked short selling, the option thing that we've talked about. Yeah, I hear you on that. We got a lot of B, and pretty much everybody's B here when the pandemic is over yet. I don't expect that this is a buy the rumor, sell the facts. So in other words, when it's finally, the cases are plummeting, that the market's going to go down with it. In other words, the actual cases of COVID are plummeting. I don't think that'll happen. I really don't. So, okay, guys, let's go on to politics. It's kind of refreshing, frankly, that the political scene is a little bit quieter now. There's a lot of executive orders. There's really hardly anything happening in Congress because they're deadlocked. Technically, obviously, the Democrats do control the Senate because of Kamala Harris's deciding vote. But if you look at the anxiety level here, I think it's really interesting that on election day, it plummeted if you're red or blue. And then it came back to normal, I guess probably because people, were still thinking that Georgia was going to be the outcome and that the Republicans would keep control of the Senate. That didn't happen. So this divergence now, Republicans kind of bummed and, have some anxiety and lack of consumer confidence. But you know what? I don't want to insult any of those of you on the right, but I'm just looking at the stock data, and I may not be thrilled with everything that happened politically in this country. But my job is to manage money and to educate those of you that I'm not your portfolio manager. And based on the data, I'm seeing the market doesn't really care. This was a surprise this week. Biden actually got fully behind Trump's Space Force, okay, flying the flag in the White House, okay, and this is something that Donald Trump, instituted, I think, in 2018, right? So I think it's positive. We got a little bit of continuity. You try to look for a little bit of positiveness, guys, in the acrimony. I won't show this again, but it's just important you guys see it. When people continue to ask me, what's going to happen with our taxes? Aren't you concerned about that? Yeah, a little bit. I am. I don't know yet what's going to happen. I do know that I'm now in a state that doesn't have state income tax, and I would encourage you to look strongly at what the tax structure is where you are living, because there are certainly some states in this country that have a more egregious tax structure than others. If you look at the Biden tax plan of 22, it's already, he's already got the one for next year. And then 21, there's nothing here in the 60s, 70s, 80s, 90s, zeros, 2010, nothing for 60 years that even compares to what the Biden tax plan is going to be in 21 and 22. You have to go back to the Revenue Act of 42, 41. Obviously, that's Franklin Delano Roosevelt to see anything even close to that. But again, that's not signed into law and it hasn't taken place. So I'm not going to trade on what could be up there. I'm trading on the data that I see in front of me. Will entitlement spending balloon? Absolutely. As you can see, it did even under the Donald Trump administration. This bar has been going up really for quite some time. All right. And the projection is that it's only going to get higher as we go, into the future here, guys. And eventually it's just going to overwhelm GDP. Am I concerned about that? Absolutely. Am I going to trade on that? Not until I see more conclusive data. I'm not. So last question for the night, guys. I think politics in 2021 will play a greater role, a lesser role, or about the same. Right now it hasn't had that big a role for sure. People just aren't that concerned. So, okay, you said, this is from Jimmy. You said, Jan, when you predict the pandemic is over. Yeah, I don't predict that it's going to be over in January. I think the peak, that's what I was trying to communicate. I thought I said that, but maybe not. So I think the peak of cases, hospitalizations, and deaths is mid-January 2021, which is last month. That's what I meant to say, okay? So I think we're over the peak and we're trailing off now. I don't think there's going to be a third wave, okay? I just don't. There wasn't an 18. That's just not what these do. And we have some really powerful vaccine data that's come out that I presented to you tonight. So let me clarify again. I think the peak of the pandemic is behind us. I think it's mid-January, okay? We got a D from Tom here. What have you guys been thinking about this week? So I didn't, just get some dialogue going here. We got a few more minutes. What stocks are you looking at? What you have concerns about all this GameStop? You have concerns about anything on the political scene? I'm here to answer questions. I think I've mentioned to you guys, I read between 30 and 34 sources almost every day, certainly every week. I bring those to you on a weekly basis to give you encouragement if you are a viewer but not a client. And if you're a client, I bring it to you to keep you encouraged that someone's looking out for you that's managing your money. Okay? But this is your shot here. Ask, so Debbie Demogowski, hey, B and C. I'm guessing you're B and Mark C. I don't know. About the same as it did in 20. Okay. D for Larry and Connie. Dr. J, we got a C. All right. I know we're on a delay here, guys, but seriously, if you've got any questions, anything you want to ask of me that I did not cover tonight, we've got a few minutes. The show seems like it wants to be about an hour here, and you guys are hanging with me. I look over here, and I've got the same number of people watching that I did when the show started, so I guess it's not too boring. This is your chance. We got a B for Innova, C for Charlie, C4, about the same as 2020. I think that's accurate. Yeah, naked short selling. Okay, not option. I know we've had that discussion, Charlie. Sorry about that. I hear you. And I don't think the SEC is going to regulate that. It certainly is not going to jump in any way, shape, or form anytime soon. The SEC has a conservative bias right now. We'll see if that continues, if people leave their seats and Biden appoints more liberal SEC members. So any other questions, guys, that I did not cover? All right. Anything you want to ask? So I always summarize this from 2 Timothy, for we have not been given a spirit of fear, but a spirit of power, of love, and a sound mind. We will need that going forward in 2021. The pandemic is not over, although I do believe it has crested. The political environment just 2 weeks into this is still pretty acrimonious, with the exception of the Biden administration liking the Space Force. We have a lot of economic data continuing to come out. We have certain sectors of the U.S. that are still very much struggling, but others that are pulling us along and pulling us up by the bootstraps. And it's for that reason that it's my deeply held belief that we will not only survive this pandemic, but in general, we are going to do better than we ever have before. I mean, at least in the amount of time that I've been doing this, is nearly 30 years. I think the market is going to be strong. The economy is going to be strong. We have weathered a really horrific time in American history. And I continue to see that, and I continue to be encouraged by that. Okay. Question here from Keith. What is your opinion on silver? We own silver. Silver is, okay, so it's an industrial metal, but it's also a precious metal. Gold is just a precious metal. Silver is a hybrid in that it's precious and industrial. So silver is used in industrial applications like copper is and like platinum is. but it also has a sense of store of value. And the ratio of silver right now to gold is at a near lifetime low. So we feel pretty confident holding it in DG, which is not something that we trade in CG or SG, but many of our clients have a DG account because they want that. D is for diversified, investing in international markets, target specific markets like Australia and Germany and Japan, and then commodities, which we do have some silver. We like silver better than gold. I don't believe in physical silver, so I know you see the ads on TV. I want physical silver because I can touch it. Yeah, forget that. Okay, you definitely can hold it inside of your stock account, in an ETF like an SLV, and I do like that. So option B, whatever else. Thank you, Charlie. Guys, thanks for the affirmation there. It's been a good show. I love the dialogue. We are a community like Reddit. We're not as big as Reddit, but we are a community of people that care about each other. I saw your well wishes, guys, for Andre, who's been with us for a long time. And he just got COVID, and he's toughing it out. And appreciate you guys rallying around him. Appreciate you being here tonight. I always say that at CB3 Financial, we don't just manage your assets, we become one of them. And you guys are a huge asset to me because this community gives me ideas, gives me encouragement, and keeps me upbeat and wanting to come back next week. So from COVID to the U.S. political scene, to the world political and economic scene, this is CB3 Live. We will see you guys next week.